Good afternoon, everybody. Welcome to Trader Merlin Show. It is your Monday edition. Exciting Monday, to be sure, for anybody who was holding some long positions over the weekend. Turned into a glorious day for you. Shout out to President Trump and his actions over the weekend. Well, not just President Trump, but just overall collective works of our government, I would say. So let me, now that I was going to show you my title card here to begin the show, I realize I've got the wrong title card up there. So we'll make some slight modifications here real quick. And then I will dive right into today's show. There we go. So here's my graphic for today. I have this graphic that says, is the trade war over? Well, this is, I guess, a hotly contentious debate here whether the trade war is over. I am certainly in the camp of no, it's not. It's just paused. And I think the markets, rejoiced today. I'm sure many of you enjoyed that nice pop. But we're not out of the woods yet. And I mentioned the other day that if we do get a full signed, sealed, delivered contract, this is done, then I think the markets are going to absolutely soar. So I think today was this kind of knee-jerk reaction of excitement. I did start a short position today, so I bought some directional puts. I went long puts on the S&P today. A small position, and if things start to drift lower, I will probably build a bigger position. So were you short out there, Luis? And welcome back. Back in Arizona. Probably not the same as the Caribbean. Not the same as Cozumel, but I hope you had a great vacation. Short going into a weekend is always tough. I would argue that for everybody here, as a risk management tool, just go flat on the weekends. You just never know what's going to happen. And, you kind of have the sense that something positive was going to happen based off the tweets that Trump was making last week. But yeah, it's not like under the the Biden or Obama administration where you didn't get shock value over the weekend. Whereas Trump, I think, prides himself on just shocking the markets on a Monday, whether it's good or bad news, but just the pain. So yeah, risk management, close out those positions over the weekends, just a safety mechanism there. All right, so is that trade war over? You guys know my take on it. I don't believe that it is. I think that we're going to see some jawboning back and forth. If you saw the talk track from President Trump over the weekend, he said that he and China's president will probably get together and talk later this week. Now, it's a 90-day pause, which, of course, leads to more consumption and people rushing to get ahead of whatever tariffs might be, because the data that's coming out is showing that the tariffs are having an impact on the markets, and some businesses, certainly on their earnings call the last couple weeks, have been pointing out their issues with tariffs and maybe not even giving forecasts for the next quarter because they just don't know because of the uncertainty. All right, let's see what I got here. Got some great, honestly, these markets have been great for scalping and short-term swing trading. Even taking things home overnight can be kind of dangerous, but I think the weekend's your biggest risk factor. So I'll usually hold positions for a week or so. As you guys know, I've got a couple rolling positions right now. I am SMCI I'm long on, and I'm long on IBIT as well. I sold cover calls on IBIT. I sold cover calls on SMCI today, and I did open up some new sold some puts on MicroStrategy today as the premium, which is absolutely fantastic, as well as going directional. So kind of funny. I'm betting the market's going to start a little bit of a sell-off here on this good news, yet I'm still long Bitcoin, SMCI, IBIT, and MicroStrategy. All right, I sold some puts and closed a few today. Great profit. Yeah, today was absolutely fantastic from a profit perspective. Now, the tariff side of things, let's just be clear the numbers here, and I don't have them in front of me, so I'm going off my memory. The deal was that the United States is going to cut tariffs from 145%, and it made it sound like we're done, no tariffs. That's not true. We're going from 145% on China's imports to 30%, and China's going from 125% on our imports into China, or exports into China, down to 10%. So certainly a very good thing for anybody who's purchasing goods from China, like now's the time to do it. And it raises the question, this one came in over the weekend, and this is Sunday night, and I can't remember who sent it in, I apologize, just scattered. But the comment was, do you think that this trade war talk is designed to get businesses to buy more stuff, to increase purchasing, to get demand surging and help the economic numbers? And it's an interesting question because when Trump says he's going to put 145% tariff on all Chinese goods and services, what does that do? Well, that's going to cause everybody to run before that goes into effect and buy as much as they can. And now that we have a reprieve, we've dropped back down to 30% for Chinese imports. I'm pretty sure there's a lot of businesses that are going to go, you know what? I've got 90 days to load up the boat and literally load up the boat and buy some inventory in case this does continue to go south from a tariff perspective. And maybe this is just part of the game of the president to get consumption going on a big scale. I don't know. That's all speculative. It was a question that was brought in. And there certainly could be some truth to that, that he's trying to juice the data by forcing Americans to buy as much and just create more consumption. I think that the main premise is genuine, which is, look, we're being charged way more tariffs to send our goods to those countries than we are charging them here. So let's just even that out, which I agree with. I think that's fine. I think you could do it a little bit more amicably and more diplomatically, but, you know, Trump isn't very amicable or diplomatic, so he'll just get things done in his own special way. Is it going to lead to an inventory glut? That was the other part of my thinking too, is what happens, let's say you are Nike, and you know that, well, Nike's got deals with mainly Vietnam, but let's say a lot of the shoes are made in China, or you're a textile manufacturer and your stuff comes from China. So you are Old Navy, right? Old Navy or Gap. A lot of their stuff's coming from China, Bangladesh, Thailand. And let's say that they now know that this tariff window is going to drop from 145% down to 30%. I got to tell you, if I'm on the board over there at those companies, I'm going to say, okay, we've got 90 days to get as much inventory as we can. And you're right, it may cause a huge surge in inventories for companies. They might stock up more than they needed to. So, you know, bottom line is the main factor that I've been outlining here on this show, at least the one that bothers me the most, is just simply the uncertainty. I don't care for the tariffs or lack of tariff. It doesn't make a difference to me. It's just uncertainty. Does this news today fix anything? It does not. We still have uncertainty. Now, it does sound like we're becoming more friendly and we're going to work together. It sounds like Scott Bessent is now getting in the middle of this as opposed to just Trump shouting out, we're going to raise tariffs. It sounds like he deflected a little bit to Bessent to, I've set the benchmark really high. Now you manage it back down to an acceptable number, which I think would work out well for the United States in the long run. Bessent is a much more diplomatic, level-headed person, whereas Trump can be a hothead and, you know, kind of spout out the mouth and do all kinds of crazy stuff. So we may end up with a lot of extra inventory. And until we get through all this, which I think could take many, many, many months, I do expect prices to have just more uncertainty to it, which is why, you know, I went through that short position today on the S&P. And if you look at, you know, where we are on the SPY, we've certainly gapped up well above the overhead supply level, right? So that level was gone. I thought we'd stall there, but not even close. If you look at the future side of things, it's a little bit different picture where that same peak, which we ripped into today, I actually shorted as we got up to this peak. So we continue to rip up through this one on the futures, which is not great. At this point here, it looks like we're going to continue on moving to the upside here. So luckily, I didn't have a big position on the puts, but if it does start to sell off tomorrow or a couple days this week, I will ultimately add more to my position. And if it gets to a little bit higher here, I've got a number on my spreadsheet that I will stop out on SPY. So I'll take a little bit of a loss on that one if it continues to rally up aggressively, and that's going to be above 600, by the way, just so you know. There's a little kind of, I don't know what pattern you would call it if you're a candlestick fan on SPY that goes back to Tuesday or February 27th through March 3rd. There were these really big 3 candles in a row, and the last one was an aggressive red one. So I'm using that kind of 600 mark as my stop loss on this one if we continue to rally up. I don't think we'll get up to 600 in this current rally. I think you've got the optimism and a lot of people believing that we're done, trade war's over, and I don't believe that it is. Yeah, no, it wouldn't be a bearish engulfing. I mean, technically, sure, Oliver, you could say that this candle right here was a bearish engulfing, but typically a bearish engulfing pattern is in an uptrend. And this was in a sell-off downtrend. Yes, that candle on March 3rd did engulf the previous day. I'll zoom in so we can see it much bigger. There you go. So yes, this red candle here on March 3rd did engulf the previous day, but it's not in an uptrend. It's in a downtrend. So I would argue that that's technically not a bearish engulfing formation. Direction is important for those types of patterns. Good. Yes, obviously a sandwich something. Yeah, I think you're right. It is something like some sandwich pattern. Whatever. What did Liz say? It will backfire against anyone who is front loading if ultimately tariffs are lower than those effect. Exactly. Which again goes back to my point, Liz, is the uncertainty is just, it's just as bad as before, because now you have this heavy tariffs, low tariffs every 90 days or so. Businesses trying to play that game. It's like making a day trade. If your timing is off on a day trade, you might be buying at the high point and then all of a sudden selling at the low point, and you're going to take a net loser. So if some of these businesses lock in a lot of inventory at 30% tariffs, and Trump now settles for 10% tariffs, that'll impact their bottom line by a good margin down the road on that bulk inventory they purchased ahead of time. So yeah, absolutely. I keep emphasizing this, but I definitely do not think we're out of the woods yet. I think that this is a good first step, and it does help specific companies. For example, we could talk about the Magnificent Seven, which I think from a tech perspective, a lot of tech companies were rejoicing over this one. And that has to do with the CHIPS Act as well, which I'll get to in here in just a second. But if you look at some of these numbers, Amazon was up 8% on the day. Meta was up 7.9%. Tesla almost 7%. Apple 6%. NVIDIA 5.4%. Google 3%. And lowly little Microsoft, which is sitting right at this major supply zone, actually popped through it a little bit today, up 2.4% on the day. So Magnificent Seven really, surging this to the upside and looking like the gunslingers of old. Remember, they're the ones that brought the NASDAQ all the way up to its all-time highs. And I don't see a reason why, if these guys continue to run, that the triple Qs won't get back up to those all-time highs. We've seen a very significant move up in the NASDAQ 100 composite. So if you go off the lows we had here back on April 7th, we've rallied 26.2%. But if we look at SMH, which is semiconductors, semiconductors have been just slightly better than that. I'll go to the peak, 40%. So, chip makers really rejoicing, I think, this not only the trade pause, but also the possibility of repealing that CHIPS Act. So before I dive into that, let me see if I can get any questions here. You guys are all rifling through a bunch here. Big Eb says, I could see that being impossible to know right now. Totally. We have no idea. And Big Eb's comment there, my daughter works for a supply chain and public company, and that's exactly what they fear. And so, Big Eb, I would ask you, if your daughter's going through that, the comment she's probably going to say is, we're actually not buying stuff right now, right? We're slowing down our purchases until this dust settles. Because if you're trying to make aggressive acquisitions here, timing these tariff things, it could totally backfire in a company. And I think we will see some companies that run out of inventory because they're being overly cautious. And we will see some companies that time it right and have better profits. And we will have some companies that time it wrong and have big losses. So, Q2, Q3, Q4 of this year, guys, expect just more wild, crazy moves. I love it. Honestly, I love it. It makes it difficult to be a long-term long-term position trader. But as a shorter-term swing guy and day trader, man, these are glory days. It feels like the .com type of volatility in some of these markets. All right, Chad says, a worker at a hardware store told me while shopping that they have seen prices going up because of the tariff war. It's interesting to hear him say it. Just walk around and you see it. I've seen prices increase a lot of different stores. Home Depot was another one. I was at Home Depot this weekend, and certainly there's some stuff that was slightly higher than what I remember. I'm a pretty good numbers person. I remember a lot of numbers. The one that sticks in my head is the Habit Burger, which is continuing to go up even more and more. I think I remember telling you guys that in 2020, a number one combo meal at the Habit was $8.65, and now it's $14.11 in just 5 years. Pretty significant. But no, inflation's no big deal. It's under control. What's going up in stock prices? It certainly looks that way. And maybe, Margaret, the reason that we're seeing stock prices move up is because if this does get resolved, then that should result in better profits for U.S. corporations. Should. Hornets, I love it. Yep, it's transitory. If you're President Trump, I would do it just to mock Jerome Powell. I would say, because tariffs, they're just transitory right now. We'll turn back to normal. Transitory tariffs. Love it. Louis says, do you follow the economic cycle as Scott does? I do and I don't. So I use the economic cycle, especially when you use seasonality and kind of the economic cycle, to give me broader ideas as to where markets may be headed. However, when you have things like this, it changes everything, right? It's kind of like saying I'm in a swimming pool on a little floaty and, the 600-pound guy does a cannonball right next to me. I'm no longer relaxed and floating. I'll still float, but there's going to be a lot of stress and gyration in that pool for a little while until everything calms back down. And right now, I think the cannonball just hit the water and we're getting the big waves and, we're going to have prices going up on something, some coming down. Obviously, anything that's going to look good will get praised by the president, and anything that looks bad will get deferred to some other administration or some other person without taking credibility. It's better to follow the tariff cycle. Right now it is. Right, this tariff cycle hasn't been an issue for decades. I mean, there's maybe little ones here and there, but this is just way, 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 way too significant. Gotta love Chinese food. Did he? Margaret, I know you're probably putting that in there as a joke, but it would not surprise me if he were to say something like that. Let's see. I was waiting for nobody knows more. Yeah, I know. I'm trying to be light on the Trump impersonations. People think I'm a hater. Look, I'm. Like I said before, there's many things I dislike about President Trump, and there certainly are some things I like about him. And no one's perfect. Absolutely no one is perfect. So let me get that out of there. Excuse me. I should not have this window open here because I've been doing more and more work up here, guys. So bear with me as I'm going to turn this off so you guys get no more alerts for... There we go. All right. You should not have any more alerts coming from that. So let's go one step further here and look at another question. This one came in from, let me make sure I get the question here. Where was it? This is from Kevin. And it says, would you look to short drug stocks with Trump's new executive order? Okay, this is a tricky one because there's a lot of different ways this can go. Look, I hate drug stock companies. First off, I hate drug companies because I don't believe that they actually solve or heal any ailments. I believe that most drug companies are concerned with making you take their drug and hooking you on that drug for as long as possible. Because if they were to heal cancer or diabetes, then you need their drug again and they'd be out of business. So I hate to sound so, negative, but I hate drug companies. Yes, I think some of them do some good with their products for those that really need some medicine, but most of them aren't going to cure a problem, and I think that that's our issue. I'm hoping that in the next decade, with AI and these models, we will find actual medicinal cures for things like cancer, because F cancer, right? We all know someone who's been dying or affected or died from cancer, and come on, we've been funding cancer research for feels like forever, and nothing's been done for it. So I hate drug companies. That's one of the reasons I don't trade them, because it actually gets me emotional. I look at a company like Pfizer, which I know we've got some people here who love Pfizer, and these guys just sell drugs to keep you addicted. All right, if you've got ED, there's ways to fix that. You don't need to take a little blue pill. Anyway, all kinds of weird stuff out there. Anyway, to Kevin's question, do I think it's time to short drug stocks? No, I don't. Look, President Trump signed an executive order, and he made it clear today. I think he said today, the tariffs, these costs of drugs are dropped 59 to 80 to 90%. Okay, that sounds great, but you're not going to force these drug companies to cut their prices 90%. You might be able to throw some regulations at them, but they are used to this giant profit machine that they have, which is why their share prices have been, growing over the decades. And if you look at something like Merck, Merck certainly is down. It's down about 40% off its highs here from back in June of last year. But if we look at long-term picture of some of these companies here, let's go a weekly just to get a bigger perspective. These companies are built to make money. Let's go to Pfizer again, PFE. Let's go to LOY. A lot of them I think have already priced in some. Man, look at this Eli Lilly chart. This is one of my my first financial document, my first financial plan that I did was with Eli Lilly. I'll explain more in a second, but boy, man, Eli Lilly really since 2013 when it was down around $50. Now it's up at 755. Pretty amazing. Their profit margins would get crushed. And if Trump is saying that the cost of drugs would drop by 59 was his low point, his high point was 90%. What do you think is going to happen with Eli Lilly's profit? If there's some federal law that says, hey, we're going to cut your costs 59%, which won't happen. Let's just assume that these guys drop 60%, 59%. That'd bring Eli Lilly down to $403. Now, it's not a simple straight, oh, you're going to lose 59% of your profits. I think it would actually be much worse than that for companies like Eli Lilly or Pfizer if that were to happen. And, the argument is interesting. It's that other parts of the world don't pay anywhere near as much for their drugs as we do. So let's fix that. Let's make that equal. And it sounds great. I think I would support that. But going about it by saying we're going to, cut those costs and force these companies to do it, I don't know how you're going to go about doing that. How you're going to force it. So personally, Kevin, I can't trade drug stocks anyway. It's literally in my trading plan that I'm not allowed to trade drug stocks or pharmaceuticals. So it's academic for me. Let me ask you guys. Let me put a poll in here real quick to see what you, the audience, think. Should you short drug stocks? I put drug stocks. Okay, so here's your poll. I've got a simple yes or no that you guys can just click on the little button there and see what you guys think. Should you short drug stocks now? It does sound compelling if you look at what Trump is saying, because he's coming at it aggressively. We already know that the Democrats have been pushing for this for a while, right? Let's bring down drug costs. So now he's taking away part of the Democratic Party's thunder, which is, hey, we want to reduce drug costs as well. So you take that away from the Democrats and make it a bipartisan issue. So I think this is great. I think we should have much lower drug prices. Thank you, Martin Shkreli, that little scumbag. Remember him, Martin Shkreli? Ugh. There's some people out there that are real dirtbags, and Martin Shkreli is high on that list. Anyway, click on that poll. I'm curious what you guys think. Would you short drug stocks now? And this is your opinion as traders. Remember, markets function because everyone's got a difference of opinions on going long or going short, right? We all process information differently. Many times you guys may not agree with what I say, and I'm totally fine with that, especially to bring it up in the chat if you disagree with me. I'm all right with that. Just do it in a friendly environment because we're all just traders trying to make a buck. Don't even get me started on the U.S. drug prices. Yeah, especially things like Sweden or socialist medicine where, the cost is not a real factor over there. All right, so in my mind, I'm going to say no. If I go to XLV, which is the healthcare ETF, this does look pretty bad. I'm not going to lie. If I look at XLV on a weekly time frame, I think you guys can see a head and shoulders pattern there. That's a fairly clear one, and we've already broken it. So let me just draw lines in here where I would draw them. I know you might draw them differently. It's okay. Don't get all huffy. But this is where I would draw it. I would go through the bodies, and you guys can see why. I'm collecting this bottom point here, and this is XLV on a weekly time frame for the podcasters out there. So bring that one up and take a peek at it. If I were to draw in that head and shoulders pattern, which starts really on January 2nd of 2024, goes up to a high on February 20th of 2024, and then sells off. At that point, everything was still okay. But then from the 15th of April to its peak on September 3rd of last year, another big move. Looks fantastic. And here's where the pattern changed, right? We had a decline roughly about 14, 15%, which bottomed out in December of last year. We rallied, couldn't make a new high, and there is your head and shoulders pattern, right? That's the head and shoulders pattern. Now, to measure out where this may go, you take from the very peak of the head to the neckline, which is right there, and I'm going to drag this over here and measure exactly, let me get that out of there, where this might forecast price is going to. I like these types of measuring objects. I know they don't always work, but that's okay. If that's the case, it's showing that the price of XLV, which is the healthcare ETF, is going to fall down to about $116, and we're currently at $135. I could totally see that happening. It's not that far away. That would be a decline from the break of about 15%. And from where we are right now, that's a decline of about, just under 15%. So I personally wouldn't touch it. I don't believe, I think what will probably happen for Kevin out here is you're probably going to see prices decline for some drug companies because it's uncertainty, right? We don't know at this point what exactly Trump is going to do, what tools he's going to use, what pressure he's going to push on drug companies. But, drug companies have been paying for parts of his campaign and massive contributions and lobbyists. I doubt you're going to see those significant of cuts. And again, maybe it's like the tariffs. Oh, 135% tariff. Sorry, 135% tariff for you, China. We're going to cut your pharmaceutical costs by 90%. Well, if you got a 20% cut, I think the people would go, all right, we got something. And maybe that will happen. But the uncertainty could cause these stocks to go down for the next few months until this gets resolved. Personally, it's not for me. It's just not for me. I'm over there with Nancy Reagan saying, just say no. Just say no to drug stocks. Anyway, so Kevin, thank you for that question. Again, let me look at the poll here. And it's fairly split, honestly. Only 31 people voted. Come on, peeps. So the question was, should you short drug stocks now? And I'm waiting because I put a little jab in there that most people haven't commented here. I'll just end it so we can see the results. Out of 32 people that submitted in the poll, 49% said no, don't short now. 41 said yes. So most of you are on that side of no, not going to short it. And it's probably just because of the uncertainty. Look, the probability is higher that they're going to go down. But remember, some of these are already down significantly. I mean, if you look at XLV going back to its high on, let's go to the high here in September of last year, to where we are right now, the entire healthcare basket is down 14.83%. And that's certainly going to be more profound when you look at something like Pfizer. I mean, Pfizer is just absolute garbage. Pfizer, since its high back in 2021 to current prices today, is down 62%. So, yeah, let's make Ozempic affordable again. No, let's not. Let's not. Now, screw Ozempic. Forget Ozempic. Let's get people to eat properly and get off their butts and go walk around the block or go to the gym or walk on the beach. Eat right, exercise, you won't need Ozempic. Now, there are certainly people that have thyroid issues or medical conditions that prevent them from doing typical weight loss things. But literally, get off your asses and go walk. Just walk around the block. We don't need Ozempic. It's like we can convince ourselves I can eat all this garbage junk food and just get overweight and fat, but I'll take a shot to get rid of it all. That's not the way it should be. RFK has many great ideas for American health. Yeah, I've heard some that are great. I've also heard some that are kind of, crackpot ideas. But the bottom line is you and I are responsible for our own health. And the longer we postpone taking care of ourselves, the more likely you're going to have issues. Now we have a really close friend of mine that had diabetes. And fortunately for him was the one that you could actually correct. And he went crazy with diet. He's done zero on the exercise front, and he's gotten a little bit better. And I keep telling him, I'm like, guy, if you exercise and ate much better, you will probably get rid of all that. But, you can tell people the right way to take care of themselves, but it's really up to the individual to do it. So, yeah, I would say ban Ozempic and don't let people have that choice, right? Don't let them fall back on the easy out. Trying to get my dad to say, well, you got to lead by example, Oliver. Every time you're over there, you can go visit your pops, say, let's go for a walk. Let's walk around the block. Get him a dog. Tell you what, my German Shepherd, even though he's 12 and he's doing a little bit better, I still give him 3 walks a day. And that's part of my routine is 3 walks a day on top of anything I do for the gym. And I'm still technically, according to the law of the land and the Health Association, I'm overweight. Believe it or not. Trust me, I'm frustrated with that. But we'll get there. We'll fix it. Let's see. What else we got? You can lead a horse to water, but you cannot make him. That's absolutely true, MG. It's unfortunate. Yeah, my BMI, I'm just like the high, just right at the low line of overweight, which, I'm going back to the gym. I'll be past that soon. If I get it down again and throw it in a couple of shirts and hats. Oh, you're just citing one of my favorite actors, John Candy. It's all muscle. You're good. No, I've got the old man spare tire. That once you get that spare tire, men know what I'm talking about. Once that tire shows up, yeah, that is the hardest thing to get rid of, man. It's the hardest thing to get rid of belly fat, unfortunately. All right. So there we go. That's my drug stock piece. Let's go to one other. I think Big Eb and a couple others mentioned this last week, which was President Trump getting rid of the CHIPS Act. So I dug a little bit deeper into this because I just want to be sure I was correct on this. Trump wants to get rid of the CHIPS Act. He cannot by himself remove the CHIPS Act. He can't take it away. It'd have to be an act of Congress. So, and that's the part I wanted to be sure on, that it had to be an act of Congress. So he could put it to a vote, and he may actually get support for it. However, keep in mind, you have all of these senators from various parts of the country, and they have constituents that may have voted for them because of their support of the CHIPS Act, right? That was also big time spending for different states. Like Texas is getting billions of dollars worth of new infrastructure improvements because of the CHIPS Act. Now, Trump, maybe rightfully so, is saying it's taking too long. This money's not getting spent. We get rid of it. It's a waste of time. I kind of agree with that. It'd be interesting to see if you had, an efficiency expert. Let's say Elon Musk came in and he was the one that distributed this and said, I need to see the results. We'd have a completely different CHIPS Act. But what do you do here? If the CHIPS Act were to go into effect, or it is in effect, if it was to get repealed, there are companies that have hired on thousands of employees and already have contractors lined up and people building. If that money doesn't come in, I think what you're going to get is huge lawsuits against the government. That would be my assumption here. I know I would sue if you gave me this money and then said, sorry, we don't want to give it to you anymore. I think that'd be way too problematic. So I don't believe this CHIPS Act is going to do anything. I don't think it's going to get repealed. I think that there will be a lot of talk track about it, and maybe that'll heat up the CHIPS race. But you look at companies like Intel. Intel's getting tons of that CHIPS Act money. And Intel really on a weekly basis looks pretty bad. It has just done nothing but sat at these lows since July of 2024. So we're almost a full year of just nothing burger for Intel here on the weekly time frame. You look at the daily, certainly we have volatility. There's big bounces. But I'd make the argument that if you're looking for Intel as a buy point, that $18 mark would be a great one, especially if you're selling puts and collecting some premium there. So, yeah, wild Intel. And there's obviously many other names out there. We know NVIDIA is also getting some of that money in Taiwan Semiconductors to build factories. I read today that Intel is delaying its facility in Ohio by 5-year delay. I can see why Trump is upset about this. Like, finish these dang factories and get online. What's the holdup? And maybe he can streamline some of that, which would help some of these companies like Intel get those factories open up earlier. I don't know what the holdups are, but certainly a lot of that one. So as far as that CHIPS Act go, I think ultimately chips are going to do fine. If you look at things like SMH I looked at earlier, it's been a pretty nice rally. They were getting crushed on the tariff initial talk or the reciprocal tariffs, and now all of a sudden really big move to the upside. Even though for the past few months since January of this year, technically, downtrend. Although I would make the argument that because we broke this high on the semiconductor ETF right around $230 back on the 24th of March, that downtrend is officially broken. The question now is when chips sell off a little bit more, how far do they go down? I don't think we'll get down to those lows we saw at 170 back in early April right after the tariff announcement. But that's the big question for me is when it sells off, which I think it will, where exactly we're going to go to. What's your take on MSTY? A little off topic. I know it's definitely off topic. I've been wanting to dig into MSTY. This is basically companies doing what I'm doing. I'll sell puts on MicroStrategy and just keep collecting that premium. And once I get exercise, they'll sell calls against it. They're basically doing wheel strategy on MicroStrategy, strategy now. What's my take on it? I think it's fine. There's just a lot of uncertainty as to how they're running, what they're trading, how they're doing it. It's hard to look at something that's trading at $23 that's paying a dividend of $1.33 monthly. You're getting monster rates of return here. I don't know. It sounds great. It almost sounds too good to be true. Mick, that's probably why you're asking. You're like, this sounds too good to be true, right? Let's add on the top of this MSTR just to see what it looks like. So here is the overlap on these two. Now, I don't care what time frame you want to use as an anchor. This tells me right away what I should be thinking. It sounds great, and this is one of those ones where you're so excited that you're getting the premium. But if you went, let's just do from January, okay? Just so we can use that as our anchor point. January 1st, right there. From January 1st, if you bought MSTY, your rate of return on the share price is negative 15%. and your rate of return for if you just bought MSTR outright is positive 35%. Now, in that time, to be fair, you've collected 227. Bear with me, guys. I apologize. I'm going to do this really off the top of my head here, calculating, because I don't have a calculator. So 227 plus 202 is 427. Plus 138 is $6. Plus $1.36 is $7.33. So if you added $7.33 to the share price of this, does that get you back up here to that rate of return that equals MicroStrategy by itself? That's the question I don't know, right? Because this percentage chart here does not take into consideration dividend payments. So maybe it's fine for you guys. It's not for me. It's just too many unknowns there. It's nice to get that dividend every month, which is great. But why don't you just do it yourself? I think you can do better than that if you set up a strategy on, here's MSTR. I'll go buy the strategy stock. Take that out. Okay, let's go MSTR. And today I sold a little bit higher than I wanted to, or I didn't want to go to the level I did. So I sold the 380s today. Let me put down here because I sold the 380s expiring Friday. And I collected. I gotta look at that account because I can't remember. I tried to get over 1% just for the week. I wanted more, but I don't like going too close to price here because I do think Bitcoin's gonna have a little bit of a retracement here. Let's see, history. So I pulled down 480. So I'm gonna make a little bit more than. I'll make a little bit more than 1% for the week, which is fine, right? If I got $3.80, it'd be 1% for the week. I'm okay with that. Now, if you look at the dividend payment that you're getting out of MSTY, it's nowhere near that. So I personally think you should just do MicroStrategy. And let's say, for example, 1% was too risky for you. So here, let's see if we can pull up the option chain and I can show you. I'll go chain. Let's just do for the week. And I'll scroll up here. Let's see. This is X. Let's go MSTR. Okay, so here's MicroStrategy's option chain within TradingView. And we know the markets are closed. I get that. But let's say you didn't want to take too big of a risk and you wanted to get, let's say, 0.5% rate of return. Well, I'm going to scroll down here. Wow, these are some pretty good premium. Yeah, it's because this is closed. There's no way that these numbers are right. Oh, I'm out a month. That's why. I was like, that number is way too big. Is that what you teach in Larry's option class? No, I don't teach Larry's option class. You mean when I went in and did a guest appearance, Margaret? No, I was just talking about digital assets, period. And there are options in crypto space, especially in DeFi marketplaces. But no, it was more about just digital assets and how I think they're changing the financial markets, whether it's futures, options, Forex, crypto, whatever. So here we go. If I sold the 400s right now, expiring Friday, you're looking at over 2%. But let's say you want to do 1%. All right, so the 1% right now would be the 380s. So the ones I have, right? So your 380 would get you about $3.90. If you wanted to get 0.5%, which would be $1.60. Let's go right down to here. 1/2 of 1% would be the 357.50s. All right, so let's put a line there. 357.50s. I'll put it in blue. 357.5. So what that's saying is you could sell puts at the 357.50 and collect 1/2 of 1% for the week, which would be 2% per month, which would be 24% per year. There's a pretty high probability, in my opinion, that it's going to stay above the 357.50s. The 380s, I think we could get back to, but also I'm getting a higher premium for that, over 1% for the week, which has been my goal. So, Mick, that was a long-winded explanation there, or thoughts on MSTY. I hope that added a little bit of clarity to it. But I like to do things myself because I'm in control of all the elements, which some people don't like that, right? Some people want to just put my money into something and let it make money for me. I think that the performance numbers I'm going to get this year, and maybe I'll calculate out all my MicroStrategy trades. Oh, wow. You weren't listening. If I go out and look at all the numbers from my MicroStrategy trades, just MicroStrategy by itself this year, I'm pretty certain I would be beating MSTY. Pretty sure about that one. So Certainly you could do MSTY. That type of stuff makes me nervous when you're letting someone else do all that work for you. You could also go and look at what they're charging you for that privilege. Let me go back and see if I can find, maybe it's right here on the, make it easy by going to their financials. Sometimes I'll show you their fee structures here. No, I'm not seeing the fee structures. One's Quacken profile. Yeah, no, I'm not seeing it, unfortunately. But I like to see kind of what their fees are that they're charging customers for this one. But let's see if I can bring it up for you on a different site. So I don't do them. I know there's a lot of these types of option strategies, income strategies on a variety of different securities that are for different, extra volatile securities, but I'd rather do it myself. Let's see. What do we got here? That's right, Liz. Smash that like button. Only 2 likes so far? I'm really slipping in my quality then. Slipping in my quality. Let's go MSTY. Okay, let's bring that one up for you guys. Man, my computer, and your stream is good, but my computer is really just a dog right now. At least from a browsing perspective. MSTY. Come on. What is going on here? Thank you, Liz. So you got to pay 1% expense ratio. 1%. 0.99. That's not a ton, but it's certainly much higher than your typical ETF. Definitely much higher than that. So, all right. What else do I have on my list here? I did the Magnificent Seven. Let's run through our top 8 here, and then I'll wrap things up. I have a 3 o'clock meeting, so I do need to end on time. Let's close this bad boy out. Okay. Crazy, my trading view is now gone. Let's put that right here. You want to look at ETH? Sure. Let's look at that. Let's go look at Ethereum. I'll bring up a little bit of crypto here, and then I'll dive into the top 8 markets, and then I'll wrap up for you guys for the day. So let's take a quick peek at crypto here. We already looked at Magnificent Seven, at least just as the symbols, not really much in the breaking it down to specifics. But you look at the crypto space today, it was pretty mixed. You had some stuff that was up. I mean, obviously Ripple with their political ties looking great. The good news about Ripple is we came right up to this overhead supply, but right around 250, and now we've broken above that. So I think you're looking at $3 on Ripple here within the next couple of weeks. And I have a feeling there's going to be some announcement with regards to Ripple and banks and the government because, of course, they're paying for that privilege to be there. Now let's go look at the old ETH. So with Ethereum, as I mentioned before, there's problems with ETH simply from upgrading the network, upgrading the system. And you had Vitalik Buterin, who's the guy who started Ethereum with a couple other people, but he was the main brainchild. He made some comments recently, I think, irked a lot of people in the industry. And those comments were pertaining to, I have control. I'm the one who makes the decisions. And that flies in the face of what a decentralized cryptocurrency project should be. So I think they lost some supporters there because of that statement. But then when you look at what Ethereum's big Achilles is, it's how slow their network is. It can't handle rapid transactions. It can't handle heavy influx of activity. So when we saw the ICO markets, the initial coin offering markets, explode a couple years back, it all but shut down Ethereum. When you had the NFT phenomenon explode years ago, it crashed significantly the Ethereum network. So then what happens is you started to get a rise in other networks that had much greater transaction scalability, like Near protocol. So here's Near. One of the main ones out there from a transaction perspective would be Solana, which is now my 3rd largest holding because of that. You know, they say they can do 65,000 transactions per second, whereas Ethereum can only do 13. Now, Ethereum has done certain things to help themselves. And let me see, I know it's kind of odd for those that don't understand cryptocurrency, but with crypto, you have what's called a base layer, and that is your main layer that everybody plugs into. And that main base layer is designed to record all the transactions and keep the transactions safe. Make sure the network is safe so there's no problems, no threats. That's its only 2 things it does. So when you move slowly, you have more time to check the process and make sure the transactions are legitimate, which is why Bitcoin is only 7 transactions per second. It's slow, and it takes 10 minutes per block, because they want to make sure they don't make mistakes. And I think all of you would agree that if you had 5 tasks to do in your personal lives, and let's say you have one day to do them, you can get them all done. You won't lose track of anything. But now let's jump it to 100 tasks. Let's jump it to 10,000 or 50,000 tasks. Now you're like, oh, I'm so lost. That's one of the concerns about these super fast networks, is the ability for mistakes to potentially happen. So Ethereum can only do 15 transactions, or 13 to 15 transactions per second. So what Ethereum has done is, instead of fixing their network to make it more scalable, to do, let's say, 1,000 transactions per second, which they could theoretically do, they have now changed their code to allow others to do that work for them. So this has given rise to what's called a layer 2. A layer 2 literally sits on top and plugs into Ethereum. Those would be things like Arbitrum, Solana, Base Layer, Optimism, not Solana, excuse me, Arbitrum, Optimism, Matic or Polygon, and Base Layer, some of the bigger names. And you're basically giving business to them, which I don't think is a good model, personally. The roadmap for Ethereum says that they were going to upgrade their system and work on scalability with 2 different upgrades. One would be called sharding, which is where you fragment the blockchain into several shards, several pieces, which can each handle their own throughput, which should give you 100x speed transactions. The second upgrade system would be rollups, which is what they're currently doing with these other layer 2 solutions. So as far as Ethereum goes, I'm not as excited as I used to be about Ethereum, even though they've had a monstrous rally over the past month. I'm obviously loving this. I will continue to hold my Ethereum just because I've got such a large position and I'm earning about 3% interest per year on my position. That's fine. Let it keep going. So that's my take on Ethereum from a technical perspective. It's just gone gangbusters here, gone absolutely wild that it's moved so much to the upside here. But I don't know. I don't really put much emphasis on this bad boy just because I feel like they're falling behind in the race. You have Solana is not the only one. You have others out there like SWI. Right? Notice that big move up in SWI over the past couple weeks has been phenomenal. It's up over 100% in the last month. You have Aptos as well, which I don't know if I have on this watch list. APT, yep, Aptos. These are all cut from the same cloth. I've actually been wanting to add SWI to my portfolio for some time. I just have not done it, unfortunately. So there we go. Who's this? Any stocks for quantum computing you want to keep an eye on? I don't really follow quantum computing stocks, personally. I mean, you're going to be looking at Google. You're going to be looking at IBM as the big ones. As far as small names, I don't know. I think Oliver's got one in there. I don't know if that's... Look at long. Oh, IONQ. Is that IONQ? I'm assuming that's IONQ there, Oliver. My eyes are bad, and it looks like long from this distance. Got 3 feet away. So there's one. I couldn't tell you much about this one, Luis. Unfortunately, it's not my area of expertise. I know that there's a bunch of quantum computing stuff coming, but I'm not paying attention to it because I don't think it's a threat to cryptocurrency, and not really that. Well, we've been hearing about quantum computing for a long time now, and it seems like it's just going very, very slowly. At some point, remember how long have we heard about artificial intelligence? Decades. AI, decades. And then all of a sudden, when they finally figured it out, it took off like wildfire, and here we are. I think quantum computing will be similar, but I don't think quantum computing's day is now. I think it's certainly a little bit later on. Yep, I saw it. I got ice cream. Qubits. That's right, Damiani. The qubits. And they're getting faster. I was reading something about Google's AI supercomputer, quantum computer, and how great it was, but it just doesn't have the processing power yet to really change everything. And who knows? I hope it happens at some point in the near future. Yeah, Microsoft, NVIDIA as well. Certainly NVIDIA would be at the top of the list, but Google is very public about theirs and talking about how the performance numbers of it. So you got Google, NVIDIA, Microsoft, of course the big ones, right? Because they would benefit the most from having such computing power over the stuff that we have today. All right, I mentioned I was going to go through our top 8 here because I have to wrap up early, and I'm way behind already, but that's okay. On our list, everything was looking great except the ones that were benefiting on Friday. You had gold down 3.47%. My finger was hovering on the trigger today to buy GLD and sell calls against it because you look right where it's at. It's had a pretty big sell-off, but it is a little bit of a double top here on gold futures. Now you're right down into this area of demand, which for me on the futures chart is between 3,200 and 3,250. So keep your eye on that one. If that breaks the downside, I think you'll see this thing fall all the way down to 3,000, which could be a big play if you're leveraged with futures. Bitcoin this is misleading because this takes into consideration Saturday and Sunday's activity as well, but it looks like a giant engulfing pattern here on Bitcoin on the futures, down 1.47%. We were doing really well as of last night. We were up over 104 and change. I think we actually kissed 105 at some point last night, but came crashing back down as we got more of a risk-on day where people were pouring into equities. Your dollar index up 1.37%. Take a peek at that. Remember, we talk about how things break through supply and demand zones. Well, I had my supply zone drawn in this dollar index with the high side at 100.27. And once we closed above it, small retest, and now just screaming to the upside. Right now, that blue line on the top of your screen, or in the middle of your screen, is your next target, which is about 103 on the dollar index. That could have a profound impact on our markets. The dollar absolutely surging right now over the past couple of weeks. Now, let's go to crude oil, 1.52%, although it's a shooting star after a 7-day rally in price, 7-day rally in price, right up in an overhead supply zone near 64. So my gut tells me bearish move on crude oil tomorrow. Right now, it's 61.95, up 1.52% on the day. Your 10-year yield surged again. We're coming back into those highs we saw just a few weeks ago on April 11th. We hit a high on that one of 4.59%. Right now, we're at 4.47. Again, more move to the upside, worse for the equity markets. And your top three, no surprise, indexes. Indexes, yes. We've got the S&P 500, 3.29% gain today. I was looking at this overhead supply zone, well, really the zone that starts right around 58.12 and ends right around 58.37 is kind of where I made my trade today, anticipating it slowing down. It did. It actually slowed down for a little bit, and then it kept on going. So we'll see. It's a thick 6,000 mark is going to be the ultimate stop point for me. I don't think we'll get there, but you know what? If I'm wrong, I'll lose some money on that smaller put position. If it starts to fall, I'll add to it and build a bigger position. But right now, things looking great off of the trade potential, trade tariff potential settlement here with China. Russell 2000 beats out the S&P, 3.52% move to the upside, closing at 2,100, and it's also coming into that same overhead supply level we saw on the S&P going back to March 25th. And finally, the King of Kings, NASDAQ, breaking through those March 25th highs. Huge green candle today, closing 20,948, up 4.03%. Gotta love that if you're bullish, and certainly was a good day for my positions, although I did open some shorts, so we'll see how that ends up going for the remainder of the week. Now, economic calendar. Actually, I'll do the earnings calendar because really there's nothing that exciting this week on earnings. We've got Tencent Media, Sony, C Limited, you've got JD.com, but really nothing that exciting. The exciting stuff is, as I saw in chat, our consumer price index numbers. So the CPI number is expected to jump back up. Remember, we saw a negative 0.1 of the previous reading, and everyone's like, whoa, what in the heck is going on here? We were at 0.5, and all of a sudden we're negative 0.1. That's a huge swing. Again, energy price is playing a big part in that. Expectations right now, we're back up to 0.3 on our CPI number tomorrow. When you take out food and energy, still going from 0.1 to 0.3. So everybody thinking we're going to start to see this stuff move to the upside tomorrow. And that's pretty much it. You got the NFIB Small Business Index coming out tomorrow as well. But really the big stuff is the Consumer Price Index. And we'll also have the Producer Price Index coming out on Thursday. So that's it, my friends. And I made it in time to upload the show so that so my good friends that listen to podcasts can get this one in a timely manner. So thank you guys so much. Hope you enjoyed it. Larry Jacobson will be my guest on Thursday. We'll do a little special on Warren Buffett, the man, the myth, the legend. It's not, I almost feel like it's a eulogy, but it's not. He's still around. He's just no longer with Berkshire Hathaway. So we'll talk about Benjamin Graham. We'll talk about long-term investing and whatever we decide to discuss with Larry. But that'll be on Thursday, and I might have another guest on the program, but we'll see. I'll take my time with that one. So thank you guys so much. If you want me to discuss anything, send your questions into tradermerlin@gmail.com. And for the questions that came in, Kevin, thank you very much for sending that question in. I like that one about shorting drug stocks. Time will tell, but for me, I'm out. I'm not doing it. But for you, let me know how it goes. Thanks, everybody. I will see you tomorrow.